morning, down almost 10%, 9.5%. Andy, it's slightly off the lows made this morning at a buck 25, but at 127.86. This is one that doesn't seem to be getting the boost and the lift as the overall market works its way higher.
Yeah, they caught the double downgrade today, I think, from Barclays.
Yes.
And when we look at LikeFolio data on this company, it's pretty clear to see why. Purchase intent mentions for Beyond Meat, where we're specifically looking for people talking about Beyond Meat's products in terms of they're purchasing them or have recently purchased them. And what we see is a really nice run in 2019 that, quite frankly, the company has failed to capitalize on in 2020. Purchase intent mentions are down 47% year over year. That's an incredibly large number. And this has all the makings of and the exact same type of pattern that we would see from any other type of fad. So I think it's pretty safe to say now, looking at Beyond Meat's consumer demand in terms of LikeFolio data, this matches up really well with a lot of other fads we've seen. There's a lot of reasons to be skeptical about this stock going forward. And, when we zoom out and we look at, overall indications of people taking on a plant-based diet, as kind of a macro trend at the consumer level, we actually see that, while a little bit down recently, still up year over year. And so what that tells me is that, the big plant-based kind of boom may be in the rearview mirror in terms of that growth rate that we saw in the last couple of years. But with plant-based diet mentions still up year over year and Beyond Meat down nearly 50%, it tells me that there's a lot of competition coming into this space and Beyond Meat's losing considerable market share. And just consumers are finding other ways to get their fix rather than a Beyond Meat branded fake burger.
Yeah, Andy, two phrases come to mind when I look at your data and I look at some of the price action in the news. It's abandoned ship and, apparently, if you're trading the stock, apply tourniquet, because your data shows, maybe even earlier than the stock and the analyst information showed, that there was a divergence between, it looks like people tried this, it got very popular, and that excitement is tapering off. And we're getting back into just a normal situation where the stock is high and the interest in this name is low, and something's got to give, and it looks like we're watching it start to give right here. Tell me what I missed there.
No, you didn't really miss anything. If I wanted to say, one thing that we saw positive for Beyond Meat, as we look through the data, it is that the consumer happiness levels with the product itself are increasing and are pretty high. So the people that are sticking around are pretty loyal, it looks like. They're happy with the product and they're probably going to be long-term consumers. It's just that pool has shrunk quite a bit. And so I think they've kind of moved through the early adopter phase and have now kind of figured out who their market is and who they can sell to. In terms of where the stock is right now, I'm with you. I'm very concerned about it at these levels. And you hate to see a company this quickly go to negative growth rates in terms of consumer demand.
Andy, when I look at this, I kind of see double whammy. So you have kind of the initial, fad, viral treatment of Beyond Meat's excitement as a brand fading and waning, as we often do see with a lot of these trends that get this kind of treatment. Canada Goose comes to mind as one. GoPro comes to mind as one. But the real issue to me here actually is probably in the second part of this, which is the overall trend of plant-based diets. And when I think about where we are as in an economic situation for the U.S. and across the world, going out and trying to transition to a plant-based diet, which is likely being done, especially if it's through Beyond Meat, at a premium in a time of pretty great uncertainty for so many Americans and people around the world in terms of employment, probably not going to be high on the list as, staying, fed and making sure that you're able to be a little bit more frugal is probably going to be higher on the list than, moving to a plant-based diet unless you were already someone on a plant-based diet.
Yeah, I think you're right. I think that there is sort of a luxury type of feel to these, moving to plant-based diets. I think that the last quarter, Beyond Meat put up a pretty good quarter. And I think a lot of that was actually because that was one of the only things still left on the shelf. Like all of the meat was gone during the first 2 or 3 weeks of COVID. So I don't know if people, maybe bought accidentally or they thought, hey, here's a chance to try something new because it's actually still on the shelf. So I think they moved some product then. It'll be interesting, going forward. I don't know how many people they converted over to their fake burgers. But, like I said, the people that do like them really like them. And so I think that this is a company that is, at least ahead of the game in terms of taste and texture and things like that. It's just so many others are catching up so quickly. And, like you said, Alex, this was kind of in some ways, for some people, it was a little bit of a luxury type of idea to switch to plant-based. And when things got a little bit real and jobs started being lost, all of a sudden, the ground round chuck at 89 cents a pound or whatever it is was fine.
Well, no, and the one thing too, Kevin, is, hey, look, I've had Beyond Meat. I can echo that the sentiment that Andy's talking about. It's a fine product, definitely better than other veggie alternatives that I've had. But you're doing this, or you're going there, and you're paying more for a product that you're saying is almost as good or nearly as good as just regular hamburger meat or whatever alternative it's supposed to be. And so if you're not someone who's going to need to get to a plant-based alternative, why wouldn't you just pay for the regular meat, especially if it's available? And on the same side, Kevin, we've talked about how Amazon and Walmart and all these other companies have added costs associated with the new guidelines around the pandemic and keeping employees and consumers safe. But at the same time, this is already an area where margins were pressured because it costs more right now to create these products than regular meat does. They're not insulated from these added costs from the COVID-19 pandemic either.
Yeah, I'll tell you a quick story. Remember like 15, 17 years ago when the hybrid cars were very popular and they first came out? I thought, what a great idea. I'm going to go buy one of these. Went into the dealer and it was $12,000 more than the regular car. And my response to the dealer was, I can buy a lot of gas with $12,000. And that's kind of the idea here. If it was price competitive with regular meat, I think they'd have a better chance. They got to get the price down where it's competitive because people, especially in times like this, and Andy, I was raised on ground chuck, so I'm living proof that you can be a responsible, productive human being raised on that kind of meat. But they've got to get price competitive, or people will choose the cheaper option when in any difficult economy.
Yeah, it's a difficult
and Andy,
time.
as we wrap this up here, go ahead.
No, I was just going to say it is a difficult time to label yourself as a more expensive alternative to what people are used to that isn't quite as good. You really have to have some conviction, in order to stick with the Beyond Meat and the plant-based diet stuff. So, I think they've got extreme competition down the road. I think that they've got a problem with pricing. They've got a problem with consumer demand for their specific brand, definitely. The one glimmer of hope for them is that the customers that they do have are happier than they were a year ago.
And so, Andy, as we wrap this up and compare this, as you said, this played out like so many other trends that we've followed and talked with you about. When I look at this, the one that's most recent that I felt like you guys were ahead of in terms of how it performed was Canada Goose. And we saw that fall off. But the thing that comes to mind with Canada Goose was it was one kind of premium purchase, that the quality was high, and you really didn't need to replace it. So there was no real return customer for that. Something like Beyond Meat, it's all about just converting and getting the return customers. From how I'm thinking about it, if they're able to tackle some of these cost issues, there's a business model there, but there's a lot of other competitors, to your point, that are coming in and are proven to be formidable.
Yeah, and I think the other thing there, I completely agree. The other thing is the seasonality of Canada Goose was extreme. You had basically one shot every year in a 2 to 3 month period to sell all of your inventory, or else you're going to be stuck with a bunch of very expensive stuff in your warehouse for a very long time that may be out of style the next season. Beyond Meat, that's not the way it goes. They turn these over pretty quickly. That said, I think that as we get into the summer months, as people start getting back together, you have the Independence Day cookouts and things like that, where last year we saw a big boost for Beyond Meat and Impossible Burger because people were giving things a try at their cookouts. Will that happen this year? I think we got to watch over the next 6 to 8 weeks. There is some seasonality in this name, and I do think that there's an opportunity to really understand more about the consumer demand levels for Beyond Meat over that next 6 to 8 week, cookout period for as much as we can get out of it during these weird quarantine times. But that will be very interesting to see. That will be when we really know on a year-over-year basis how is that plant-based diet really holding up. When there's burgers on the grill, it gets pretty tough to stick to that.